Wasted money on cures. Forgot how to fix myself. They say that time is free. Then why is it so precious? Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. Time is running out. Time is running out. Lately I've lost my track. I've sailed the deeper seas, hoping to find something to bring back better times. Oh, I'll say memories in my head, like Polaroids on walls. They remind you to look ahead. But time is running out. 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 Time is running. Time is running out. But time is running out. What if my best days are over? They can be over. They can't be over now. Time is running out. What if my best days are over? They can't be over now. Time is running out. Time is running out. Time is running out.
Well, good evening. Welcome to week 6 of our autumn revision program. We take a key topic or a key exam skill and we just spend 25 or 30 minutes focusing on that. Tonight's topic is business growth and business objectives. We did cost, revenues and profits last week. If you're watching live and you're subscribed to the channel, we encourage you to contribute your answers, your thoughts, your comments to the chat window. We'll do our best to showcase the very best answers as we go through. If you're watching on replay, take a moment whenever you need to just press the pause button, particularly when we get to some multiple choice questions and activities. So let's make a start. I've got two little chart quizzes for you. So on this one, identify the business. So these were the top companies in the world globally by their revenue, not profit, revenue in 2024, all converted into billions of dollars. And the challenge for you, if you wish to accept it, is to identify which business came top, which business had a total revenue in excess of $673 billion. What do we think? We'll have a look at the other businesses listed there, see if you can work it out. So which company in the world had the biggest revenue in 2024? So Charlie has gone for NVIDIA. Good answer. A couple of people saying Google, Microsoft. Charlie B says Tesla. Some good answers coming through. Kutsai says Amazon. Johnny Bill says Microsoft. Some really good answers. I think we're still looking for... yes, Michael Donnelly comes in with Greg's. Thank you, Michael. Still looking for the best answer here, and I think we have the first correct answer. Let's showcase it on the screen if we can. It is indeed Walmart. Well done to Kutsai, one of our great weekly contributors, always on the ball. Back on. There we go. Well done. So that's the first question. 1-0 to good sign. Now this is slightly harder. These are the biggest companies in the UK by revenue, but 2025. So this is the sort of rolling financial year kind of stuff. So this is the biggest companies by revenue over the last 12 months, if that makes sense. And again, it's in billions of dollars. Okay. Oh, Ulberg is now in the building. Says, hi, Geoff. Sorry I'm late. If we could all give Ulberg a digital welcome, please. Fabulous to see. So Shell, BP and HPC, two oil companies in the big bank, come top, well, at some distance, if truth be told ahead. Which business is fourth? They're ahead of Unilever, AstraZeneca, Aviva, Compass. They're ahead of a lot of big businesses. What do we think? And I think we'll probably get some good answers here. So which business has the highest revenue in the UK? And I think the right answer there came in. Yep, what picked up? It is indeed Tesco. So Tesco is a massive business with a revenue of, well, approaching a run rate approaching £2 billion a week, not too far off. Now, if you add Tesco and Tutor to You together, if you put the revenue of Tesco and Tutor to You together, we still come fourth. Okay, so let's move on. I've got 4 multiple choice questions for you. They're all past exam questions. I know some of you will be doing this kind of stuff in year 13. If you haven't quite reached it yet, don't worry, you will do. But if you have covered this, then please have a go. So a firm has a choice between 5 levels of output, shown in the table there, and also shown the total cost and total revenue producing each output. The firm could sell whatever output it produces, but the firm decides to produce 4,000 units. What is the firm's aim? What do we think? Have a go at these 4 multiple choice questions. Post your answer, please, into the chat window. So what is the firm's aim given that information? Answers coming through. Thank you to everybody who are joining us today. Good numbers tonight. And if you're following on the chat window, there seems to be a consensus. They're saying C. Let's double check. And the answer is indeed C. Yeah, you maximize revenue where marginal revenue is 0. Well done. Okay, let's try something slightly harder. Well done to everybody there. I think we all got that right. Question number 2. Again, some students haven't yet covered this cost and revenue curve analysis, but if you have a go. Diagram shows the cost and revenue curves for a business. Which output level will enable a firm to achieve its objective of maximizing profit? So what do we think here? Answers flowing through on the chat window. Well done. Do have a go if you're watching live. We love people coming in, and Timon has come up with an answer, and Elliot and Charlie and Sam. Fantastic to see. The answer coming through is A. Yeah, marginal revenue equals marginal cost. Now, what the exam boards do is they often give you exactly the same diagram, but just tweak the question. So let's have a look at question 3. The diagram shows the cost and revenue curves for a firm. Okay, same diagram, same question. Which output level will enable a firm to achieve an objective of maximizing sales subject to making normal profit? So it won't be A, so it's going to either be B, C, or D. What do we think? Maximizing sales, just making enough revenue to cover costs. So A is profit maximization. Most of you coming in with the answer D. A couple of people, 2 or 3 people saying C. Well, C would be allocative efficiency. Price equals marginal cost. B is maximum revenue. The correct answer is D. Well done. So that's a D. So this is a really good point here, isn't it? That if you know your diagrams, I was chatting to some students yesterday at Durham University who were first year economics students and finance and other subjects, and they come to the live streams. It's great to chat to them. And they were saying that they absolutely smashed their diagrams. The days and weeks before the exams, diagrams, you get great feedback and great marks and rewards in multiple choice, in essays, all kinds of things. So go for the diagrams. Okay, right, now last question is slightly harder. 2 firms selling the same type of product, think about the type of integration there, find it more efficient to merge. Which combination describes how the merged firm's average cost of production and demand curve are expected to change? I think this is a trickier question. So take a moment, team economics. You've made a great start. What do we think here? Which combination describes how the merged firm's average costs and demand curve are expected to change? This was a 2024 question. I won't tell you the exam board. Most of you saying B. Let's have a look. It is B. Yeah, the idea of mergers, in theory, is to achieve scale economies, lower costs, and also you've got a bigger market share. So in theory, there are fewer substitutes of note and size and scale. So demand becomes more inelastic. If you got that right, by the way, that's great. Can you put in your chat window, please, how many you got out of 4? Let's have a quick look. Scores on the doors, please. If you got 4. No, Ed's saying it wasn't AQA Ed. It was I think it was an international exam board, CIE or EdExcel International Board. So a lot of you, including Apple Plum Pear, Ash and Charlie and Adam, all getting 4. Absolutely fantastic. Congratulations. Okay, now, as always in our sessions, I try and pick 2 little case studies that might be useful for your application. And oh yeah, so the students yesterday were saying that they used the live streams to add to their existing notes. They wanted to add in the application. They said they had great theory notes from school. They just wanted those little bits of application to add in. So let's look at Tesco, mentioned in the previous question, wasn't it? It employs over 1/3 people worldwide. Their market share 28%. That's been relatively stable. Of course, the rise of Aldi and Lidl has taken market share away from the likes of Morrison's and Asda and Sainsbury's. So there's the Tesco revenue rising sharply up to 2025. That's just in the UK, by the way. The previous chart showed Ireland as well. Here's a question for you. Let's have a look. I'll come into Ben's question in a second, Ben. Okay, now Tesco is profit seeking, but it's not necessarily a profit maximizing firm. So I'm just going to throw this question your way. Can you give me 2 reasons why Tesco might choose revenue maximization over profit? Go, and we'll post some answers on the screen. To move away from profit maximization towards revenue maximization. Why might they do that? Give me some economics. Business objectives are not written in stone. They often change. They're flexible. Great answer there from Ben and from Timon in particular. That's lovely, like that. We love answers coming through on the screen. It shows you bang on it. And the key really here, Team Economics, is to focus on the economics. Try and bring in some economic concepts. Yeah, and our YouTube commenter 12 talking there about market share, which we'll talk about in a second, and also addressing the principal agent problem. Maybe take into account some of the aims and objectives of managers rather than shareholders. Wow, the chat is full of great answers. Well done to everybody. Here's Aki's point. Revenue maximization can lead to larger market share and satisfy shareholders. So Aki's hinting there at a kind of satisficing approach. Really good stuff. Ramsey talks about achieve economies of scale, and of course you've then developed that point for greater emphasis. Superb. Let's have a look at my answers. I've gone for market share, following Ramsey's point. So by focusing on revenue, firms can expand their customer base and market share. This can lead to greater long-term profits. So you might sacrifice short-term profit, but hope to get bigger profits going forward in the long term, in particular through economies of scale and brand loyalty. And I've just given you another, I know we're talking about Tesco here, but Amazon initially, there's no question they prioritize growing sales, the everything store, and market presence over short-term profit. In fact, their business was built to make a loss essentially initially because they had to ramp up their scale of operations. And the second point is all to do with managerial motivations. So typically big firms, there's a separation between ownership and control. Managers often looking for the top line, the revenue for their own power, prestige, maybe sales bonuses, job security. So they may prefer a higher turnover or revenue, which looks impressive, even if actual profits are lower. So some great answers. Well done. Superb. Here's actually, I showed you revenue for Tesco's. The next chart actually I wanted to show you was Tesco's profits. So Tesco operates a revenue of 60 in the UK and Ireland, let's say 80 billion revenue, and profits about 3 billion. So it's a highly profitable company, but it operates on small margins. Their rationale always has been to sell huge volumes to make the bottom line sing for them. So just under £3 billion profit, significant recovery in recent times on about 80 billion of revenue. So that gives you a feel for margins, but they're clearly a very successful company. Fantastic stuff. Let's move on. And our second case study, our final case study for tonight. Those of you new, by the way, we always spend 25 minutes in a session. We don't go on for an hour. We're just going to focus on 2 case studies to reinforce what you've been taught, what you've been covering in lessons. And here's one of my favorite businesses. I'm actually with Octopus, and that's supplying me in this studio here. Founded just over 10 years ago by 2 brothers, both from Cambridge University, economics students. It's now the UK's largest electricity and gas supplier, millions of households. Its business model emphasizes technology, certainly does. Kraken, their software platform, is licensed to other utilities, and they also invest increasingly in renewable generation, installing heat pumps, EV infrastructure. They are part of that fast-growing business, smart tariffs and grid flexibility. So, and you can see there on the right-hand side, the growth of Octopus Energy's market share in gas. I think, if memory serves, that only takes us up to the end of 2024. I think they've now overtaken British Gas to become the biggest supplier of gas in the UK. Okay, so here's a question for you. In 2023, Octopus Energy completed the purchase of Shell Energy, okay, in the UK and Germany, adding 1.3 million customers. I think it was called First Utility, wasn't it, the Shell business? Give me 2 motivations behind Octopus Energy buying Shell Energy. Have a go. So what drives acquisition? Octopus bought actually Bulb Energy as well when that business failed. And then December 2023, they bought Shell Energy, adding 1.3 million. So again, focus on the economics, as John Burles has done beautifully there. Really good answers in the chat window, everybody. Absolutely fantastic. Well done. So many of you have clearly studied mergers and acquisitions and the economics, the business economics of it, really. Yeah, Aki talking about scale economies and market power. Really good, well done. Ewan talking about barriers to entry in the market. Long-term managerial economies of scale, maybe. Yes, potentially. And decrease average cost, take control of a Shell's innovation products to be able to decrease average cost. Yeah, so many of you are linking it to scale, to cost. And ultimately, bottom line is if you get a better market share, as Ewan's talking about there, if you can create higher barriers to entry, then you can make and sustain higher profits, supernormal profits. Here's my answer. I've gone for 2 things, and there's a little bit of overlap, if truth be told, but economies of scale. So Octopus has big fixed costs, technology development, marketing. The more customers they have, extra 1.3 million customers is application, you can spread those costs over a bigger customer base. And of course, it's much cheaper to market to existing customers than new ones. So long and average costs go down, productive efficiency goes up. And if they keep the prices the same, they can maintain competitive prices and maintain or improve their margins. And linked with that is market power. Many of you were saying that. They give it more market share. It gives you more pricing power, particularly in European energy markets. So they're diversifying into the German market. And Octopus can then use their monopsony power to better negotiate with energy generators and suppliers. Octopus doesn't create its own energy. Very, very little. They're in renewables, but it's essentially a technology business. That's what it is. It doesn't really create any energy. In much the same way that Adidas doesn't manufacture any t-shirts or shoes. They just brand and design them. But bargaining power gives them more clout in the market. Good stuff. Now, so Octopus has been acquiring businesses, but just to finish off with, they've also, great question. What is monopsony? Thank you for that question. Monopsony is when you have a lot of buying power in the market, buying power. So if you're buying your energy from a wholesaler, then if you've got that market power, you get a better price, which you can then pass on to your customers. Okay. YouTube commenter question: how can we use application from our own knowledge in paper one, using paper one to give extracts in a certain industry anyway? Correct. That depends on the exam board. If you're with Edexcel, the 25 mark questions on paper one do often require you to use your own knowledge, choosing a market or industry of your choice. Okay. Ben comes back. Sorry, I should have answered Ben's question. What's a shoe leather cost, Geoff? Shoe leather costs, Ben, are when you get rapidly changing prices, often at times of high and volatile inflation. And as a result, people have to spend more time looking for the best deals. So if you go back a couple of years, people were spending a lot of time searching for the best energy bill or the best supermarket prices. Price comparison sites help reduce those shoe leather costs. But when prices are high and volatile, people often use up time, energy, money, searching for the best prices. That's called a shoe leather cost. Okay? Ben, I hope that answers your question. Charlie says, for Edexcel, is own knowledge only needed for 25 markers? Yes, for the essay. There'll be a little STEM as an introduction to the essay, but you are by and large expected to use your own knowledge. Whereas for the previous questions, Charlie, in the paper, the daily response, you can just use the extracts. But when you get to the 25 marker, you are expected to use your knowledge. And I was chatting to the students yesterday. They said that they built up their favorite industries, their markets, and they went to the exam fairly confident of what they wanted to talk about. Okay, so here we go. I'll come back to Ed's question in a second. Yeah, so still with Octopus to finish with. So Octopus has bought businesses and grown very quickly. But actually just recently they've announced a demerger. Oh yeah, so Unilever has announced a demerger. Does anybody know which business Unilever is trying to sell? They're one of the biggest businesses. I think they appeared on our chart. Does anybody know which businesses Unilever is business that's trying to sell? And Ulberg is absolutely bang on it. So too Ed and Elliot. Yeah, they're trying to offload Ben & Jerry's. And that will be a terrific demerger to look at for your notes if you're doing it in year 13. So the news is that Octopus Energy is trying to spin off their technology arm Kraken, which is an operating system which connects all parts of the energy system, including billing, management of renewable generation. I mean, it's incredibly sophisticated and very, very effective. And it does allow, for example, Octopus Energy to really introduce highly flexible pricing for energy at different times of the day for customers. So Octopus is trying to demerge. Here's a question for you, our final question today. Can you give me 2 reasons you might want to use Octopus if you want? You don't have to. Maybe Unilever. Why a firm might decide to demerge part of their business. Have a go. 1 minute on the clock. So what drives demergers? This is often not covered very well in year 13. A lot of people are pretty hot on mergers and acquisitions. And what do we think about demergers? Because if you've got some notes on this, I think you'll be in a great place. So Apple Plum Pear talks about avoiding diseconomies and lack of synergy. Good point. Yeah, demergers often come about as a result of the failure of acquisitions. So they're trying to offload underperforming businesses. Ed's got some great points in there. Offloading underperforming businesses might be due to declining demand. Fantastic. Oh, wow. It's clear that our team tonight are bang on this. I think this is maybe a hot topic for the early part of your year 13 course. By the way, I hope you're enjoying your economics this year. I love economics. Ammon talks about attracting new investment for investors who only want to invest in one group of businesses. Yeah, so it could well be a vehicle or to take Amon's point, a catalyst to bring investment, new investment into a business. We're going to hive off a business we think has got potential, and we want new investors to come in and inject capital. Charlie B, as a firm goes too big, complexity may grow, creating inefficient bureaucracy, leading to diseconomies of scale. Charlie, I think you've hit the nail on the head there. One of the prime reasons for demergers is to avoid diseconomies that may have built in. And somebody called Tutor to You talks about reallocating capital to better returning businesses. Totally amazing point. Have we got some other answers? Strategic repositioning in the market? Yes, that's a really good one. Perhaps they want to reposition away from what they perceive to be stagnant or sunset industries and put more capital into sunrise industries. These are incredible. Let's keep going. Maybe the managers were mean to each other and there was a managerial diseconomy of scale. And then actually develop the point and talk about fighting. Yes, I think often these demergers are a result of cultural conflicts. Yep, Amon this is clearly an area of expertise for her to focus on core businesses to cut costs and therefore improve margins and returns to shareholders. This is incredible. A demerger typically is indeed splitting one business into two. Okay. Now, a Kraken will still be largely owned by Octopus, in particular the two owners, but the two founders. I love stories of successful businesses that were co-founded by two brothers. Love those stories. Really interesting. Dan's in the building. Dan Bell, good afternoon to you, Dan. Fantastic stuff. Yeah, really good question. Here are my 2 points, just to finish off with. I've kind of thought about this from an Octopus point of view. So it's all about returning or unlocking shareholder value. So clearly investors may well value Kraken Technologies more potentially than Octopus Energy Retail than if they were two businesses. So by demerging, you get a greater valuation. They think that Kraken may be worth 10 billion. It's a high growth technology multiple, whereas the retail energy business probably operates with slower margins. It's not going to grow as quickly. Now, how much gas do you need? And linked with that, specialization efficiency. You in theory, demergers allow you more productive efficiency. Demergers allow each firm to pursue different objectives, different pricing strategies, and innovation cycles. Now, Ulberg is reporting on this point about managers getting into a fight. Elliot joining in. There's a lot of stuff in the chat window about managers starting to fight. And so Ulberg's point, I think, is look about the economics here. Maybe the managers set up a fight and one got beaten up big time. Then they have to go to the hospital, which means that the business may become inefficient and then a demerger may occur. That kind of analysis and evaluation is very rarely seen in an A-level paper. Very rare. Well done. Thanks, everybody. We've had our 25 minutes. We have looked at some multiple choice questions. We have looked at, thanks, Jim. That's the end of my slides, I think. We've looked at the multiple choice. We looked at Tesco. We looked at Octopus. You did amazingly well on multiple choice. And I think this group were superb tonight. You're absolutely clearly very knowledgeable, very really up to speed in this area of the syllabus. But hopefully those two businesses, Tesco and Octopus, will be good ones for you to study in a bit more detail and add to your application notes. Ed says, I'm new to the Excel exam board as I set AQA in 2024. Do you have any videos advising how to use the application? Does it matter how recent it is? Oh, we do have lots of videos, Ed. If you go back into our gallery or showcase of previous videos, we do have lots of videos on Excel application. So have a look at those. Does it matter how recent? No, anything up to date is fine. 5-10 years old is fine, as long as you're showing the examiner that you have an awareness of what's gone on and is going on. Okay, fantastic stuff. Well, what am I doing tonight? It says, thank you, Geoff. Have a nice evening. Maybe have some wine and a fine dinner. No, I'm going on tonight is a massive night for sport. Tonight on Sky, Harrogate Town, my team are playing Crewe Alexandria in the big match on Sky. So as soon as I finish here, I should be getting my scarf on, my kit, my warm coat, and walking 2 miles to the ground. So if you see me, I'll be in the LED Barclays stand, cheering on my heroes, Harrogate Town in League Two. Can we make it 3 wins in a row tonight? How exciting. Thanks to everybody for joining in. As always, thank you to our great student contributors. Our group is growing and the answers are amazing. Next week, we move on to some macro topics, I think. But in the meantime, stay healthy, stay happy, stay curious, and we'll see you soon.